This is Business Week Armenia, CivilNet's weekly economic digest. Here's what's making headlines in Armenia this week. A group of leading civil society organizations and concerned citizens filed a lawsuit this week challenging the Armenian government's decision earlier this year to grant the operator of the long-stalled Amulsar gold mine a $150 million loan guarantee. In a press release, the Transparency International Anti-Corruption Center, Green Armenia, and Center for Community Mobilization and Support confirmed that they, together with a group of residents of villages near the mining site, are seeking to invalidate the government's loan guarantee, alleging multiple violations of Armenian financial and environmental law. The lawsuit is based on both citizens' right to live in a healthy and safe environment and to health, and on NGOs' right to protect environmental interests, the group said. There was no immediate reaction from either Lydian Armenia, Amulsar's operator, or the government, which owns a 12.5% minority stake in the mine. If successful, the suit could derail the project entirely, since Lydian says it needs a multi-million-dollar loan to finish building production facilities. Last month, Lydian CEO Haig Aloyan said he expected to launch production in the fourth quarter of the year. The suit comes just days after Prime Minister Nikol Pashinyan's office revealed that Lydian now plans to take its $150 million loan from Ameriabank, one of Armenia's largest lenders, rather than a syndicated loan from a consortium of several other local banks, as previously planned. Neither Lydian nor Ameriabank have commented publicly on the matter. Pashinyan's cabinet approved the loan guarantee in February after the Russia-led Kazakhstan-based Eurasian Development Bank declined to finance the project in still unclear circumstances. Lydian, which is ultimately owned by private equity firms in Canada and the United States, first broke the ground at Amulsar in 2016, but construction quickly stalled amid political and environmental controversy, and nearly a decade on, mining has still not started. If completed, Amulsar would be one of the largest foreign investment projects in Armenia's modern history, and the only large-scale Western investment in the country since Pashinyan came to power in 2018. For its part, Lydian says it expects the mine to generate some $120 million every year in tax revenues for the government and create 750 direct and 4,000 indirect jobs in Armenia's southern Vayotzor region. Meanwhile, Armenia's central bank said this week it will hold interest rates unchanged at 6.75%, citing increased global uncertainty amid U.S. President Donald Trump's escalating trade war. In the second quarter of 2025, risks associated with a further slowdown in global demand increased notably, while inflationary pressures intensified in the United States. Uncertainty around U.S. economic policies remains elevated, the central bank said in a press release. Continuing, the central bank noted that in the first quarter of 2025, 12-month headline inflation accelerated, reaching 3.3% in March, while core inflation stood at 2% year-on-year in March, below the 3% inflation target. It marks the second time in a row that the central bank has declined to lower interest rates since mid-2023, when it switched to an easing monetary policy, cutting rates by a cumulative 400 basis points. And finally, Armenia's national debt continues to grow, increasing in US dollar terms by 5.8% since the beginning of the year, and is set to approach $14 billion by the end of the year. That's according to the country's finance minister, who provided reporters with the updated figures at a wide-ranging press conference late last week. As of March 31, Armenia's state debt amounted to $13.6 billion in US dollar terms. By the end of the year, it will approach $14 billion, Vahe Hovhannisyan said. Hovhannisyan's remarks come as Armenia has substantially increased its borrowing in an apparent bid to manage its debt. Last month, the government issued more than $250 million worth of bonds on the domestic stock exchange just weeks after posting a $750 million Eurobond in London. Armenia is expected this year to pay about $2.9 billion to service its debt, which is split nearly evenly between foreign lenders and domestic creditors. Officials attribute Armenia's growing debt in part to the government's decision to take on Nagorno-Karabakh's outstanding loans and liabilities after the local administration collapsed in 2023. Increased government spending on defense and on efforts to integrate the more than 100,000 Armenians forcibly displaced from Nagorno-Karabakh also contributed, they say. Continuing, Hovhannisyan said he believes international credit rating agencies are waiting for a peace deal with Azerbaijan before upgrading their valuations of Armenia's ability to pay back its debts. In our view, the main factor impacting our rating is the geopolitical situation. Once there is a deal, we are confident that our rating will improve, Hovhannisyan told reporters. As of now, all three big credit rating agencies give Armenia sovereign credit ratings that are considered speculative grade. Those ratings, which are also commonly known as junk, indicate a higher risk of default. The agencies rate the creditworthiness of both Azerbaijan and Georgia more highly. And as always, please follow CivilNet for the latest news and independent reporting from our contributors on the ground here in Armenia.